Good morning, guys. How are we all doing? Happy Saturday, everybody. Welcome to the weekend. Hope you guys have all had a great week. I am Dan from Trading with Dan, and this is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, we shall go straight over to those Bitcoin 4-hour charts. Yeah, so we find ourselves still within this little sideways range that we've got going on. I think we have established the wider range, but we are basically trading smack bang inside a smaller range within that. So yeah, waiting for literally still same analysis on Bitcoin, waiting for a close, a break below either 60,000 or a close and a break above 64,000. That $4,000 range we are currently pinned in, whilst some of our stochastics kind of reset. So it's not necessarily the worst thing. Consolidating at the highs pretty much is never a bad thing. It is never a bad thing. So obviously just gotta watch out for the horizontal 60,000, and obviously more importantly our level down here, and then yeah, to the upside 64,000 and our previous all-time high. So not much else I can say there. If we go and have a look at Ethereum, Satoshi pairing, it is kind of looking bullish as well, trying to bull flag up here, whilst Bitcoin is moving sideways. I mean, I kind of feel like this is going to struggle to break upwards, even though Bitcoin is trading sideways at the moment, because people are anticipating a break, an expansion in volatility in Bitcoin, which then will make this pairing suffer. But so far it's not happened. So maybe it just creep up, climb a wall of worry. We've got a pretty important level of resistance to break our way through, and then yeah, things will get great. Things will start to look very good. I think Ethereum is a ridiculously good crypto asset, and yeah, we all see the people that analyze and talk about it. Even lots of Finance 1.0 people really like Ethereum. It has got a lot going for it. So ultimately I do think this is going to go on a tear. If we look at the USD pairing as well, it is just basically hovering in and around those highs. So yeah, I mean, it's looking bullish until it isn't. It's gonna, dollar value is going to pretty much follow Bitcoin. The Satoshi value is going to pretty much I think increase against Bitcoin, whilst ever Bitcoin is consolidating or trading sideways. Obviously it will take a breather whilst Bitcoin moves, and yeah, I mean, there's not much else I can really say about crypto. Bitcoin dominance as well, moving down obviously in a nice fashion, gonna hit some important levels. If we take out some important levels then things are going to start to get pretty wild. But yeah, things I think are going to get pretty wild. If we look at just stock markets, what they're doing, I mean, they're going mental. Obviously a bit of a pullback into the close on Friday. Why not take some profits after such a crazy week? Nascoin as well, just easing off its highs, but nothing really major. We've even got gold going now. Gold, as you get, this is silver, but we've got gold going as well. Silver trying to make a move back up. Here is gold back above, cleanly above and holding above 1800 into the close. Hit one of our levels, but yeah, I mean, this is still bearish until it isn't. But ultimately, this may start to get some upward acceleration. But at the moment, I mean, you can kind of see what is going on. But yeah, I mean, what gold is reacting on is obviously this here. Some important news down here. This is pretty much I mean, this is just the massive dovish nature of central banks, and by dovish you can say dovish, or you can just say impotent nature of central banks. The UK bottle job their 15 basis point hike. Powell is bottle jobbing any rhetoric towards like any real sustained tapering. Is like, we'll just assess it as we go. It is far from watching paint dry, put it that way. It's far from an autopilot. They're gonna monitor it, which basically it means, all that really means is if we ever get a blip in the stock market, then they're just going to stop their tapering, and then the stock market is going to go back up. So it's literally a free rein. And obviously what that is, if rates are then going to not rise as much as people were going, or tightening is not going to be as much as people thought, or tapering not tightening, then obviously the bond yields are gonna rally, which is obviously bond prices are going to rally, which is obviously the yield coming down, which is what we're seeing. And this is a pretty major breakdown here now. This was looking like a very topping string formation, and yeah, we broke below this trend line, back tested it a few times, and now we are trade actually closing below this important horizontal. So yeah, bonds basically pricing in. Bonds are basically pricing in the fact that the Fed, all central banks, to be honest, aren't going to do much. I mean, the UK did help hit this as well. They're pretty much pricing in the fact that central banks aren't going to really do any realistic tightening or increasing rates, and ultimately prices are going to go higher, and then obviously that is going to destroy demand, and then that is going to be a drag on the economy, and then etc, etc. Also a good jobs number as well, a good jobs number, because I mean a lot of economists, I mean, maybe rightly, I'm not gonna slate them on this one, are expecting obviously an increase in employment numbers will relieve supply chains, which is fair enough. So obviously then that is gonna decrease inflation. So again, another reason why the bond market can sell off, because we did get a good number. We've been talking about how we are getting this reflation. We do talking about how we are potentially going into Goldilocks scenario with good jobs numbers, basically bringing down the inflation rate, which is literally what's happened. So yeah, it's pretty much getting telegraphed at the margins of the data sets, and yeah, I mean that is becoming an increasing probability. If we go into Goldilocks, of obviously growth going up until obviously inflation kills it, but obviously until that happens, or until tightening actually does happen, even if it's fiscal tightening rather than monetary tightening, with Janet Yellen obviously re-entering the bond market. So yeah, things can start to then change, but in the meantime, that the destination, like say the end of next year, is a couple of careers away. No one really cares about that. We gotta manage risk in the near term. We've got to manage the direction and the velocity of where we are going in the present. So yeah, DXY, DXY, looking good, looking strong. What I will say, I feel like I just try and make excuses for this going up. I mean, I don't need to make excuses, because the stock market is going up, the bond market is going down. This isn't messing things up. So I don't need to make excuses, because the market has shown us that basically my view is right, is that this is just because it's a currency relative to other currencies, and it is just going up because other currencies are just gonna have less pressure on them going to have more downward pressure on them than the dollar. So relative to them, the dollar is going to go up potentially, but obviously a dollar against any asset, i.e. the assets going up, that is obviously where the real reflection of the value of the dollar is going. And yeah, don't forget, in this sort of crack up boom scenario, a lot of capital will just flood into US markets, because you want to be in US assets, because it is the world reserve currency, and it's pretty much the world's biggest economy, and it has got the world's biggest military and all that stuff. So you kind of want to be in US assets. And obviously you have to buy dollars to do so, and then obviously if you buy dollars and dollars going up, then you're winning on your assets, you're winning on your forex trade as well. And yeah, I mean, it just will be a big bubble and a pile into the US, but obviously then the US will start doing whatever fancy stuff it wants to do, and that'll be a downward pressure. It's always a tug of war with the dollar, and especially the DXY. It's always a tug of war with the DXY, with opposing factors. Not much else that I want to look at on here. Oh, we look at the dirtiest, worst chart in crypto. Here it is. It is relentless. It is disgusting. They are failure. This is not a store of value. Do not let them let anybody tell you otherwise. This is just disgraceful. This is disgraceful. So anyway. We don't like negativity here. Only good vibes. So yeah, let's look at stochastics. How are they potentially bullishly resetting at the moment? Yeah, 4 hour all the way down, so that's got the potential to turn back up and try and get us towards that $64,000. Every time I say that, I just think about that. Who wants to be a millionaire? The $64,000 question. Not quite sure why he wants to be a millionaire, but then you win $64,000, not a million. But anyway. I guess this was back in the day when $1 million used to be like probably an obscene amount of money, and $64,000 would probably buy you like 4 houses. But yeah, 10 hour coming down and potentially going to turn back up. 12 hour Yeah, 12-hour bullishly resetting in inverted commas like we're talking about. Daily still pointing up. 2 days still coming down, bullishly resetting within our optimistic inverted commas. Same with 3 day. 5 day turned down as well. Weekly still looking great though. Bi-weekly looking great and monthly looking great. So yeah, like I said, a potential bullish reset if we can, if Bitcoin literally just trade sideways, consolidate in this area. Even if we break below 60, come down to 57, 58 base there, start to move back up. I mean, the trend is your friend. Realistically, fundamentally, trend-wise, everything is pretty much bullish. Obviously, like I said, there are plenty more black swans in the current financial systems due to the shenanigans that are going on, and one black swan will hit us eventually at some point, and it will be Mad Max Armageddon hyperinflation type scenario. But that is there's probably a long way to go between here and that point, regardless of what twits on Twitter like Jack Dorsey. I mean, just talking about hyperinflation. Literally, hyperinflation is the end. Like, I know I probably mentioned hyperinflation, but I am being a bit hyperbolic. I just mean high levels of inflation. I mean the 20% levels of inflation, or the levels of inflation in the 70s when we had to our 20% interest rate was not hyperinflation. Hyperinflation is like Zimbabwe, thousands of percent like a month. But yeah, that it will be the end. So obviously you only get one end, and yeah, so calling that end is going to be a difficult thing. So don't do it. It's just regular high inflation we're getting. And yeah, talks of hyperinflation, the is kind of like just pointless, because when you hit that point, it's like, well, who cares anyway? It's all done. So yeah, thanks for listening. Remember, this is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.